Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is the Chaikin Power Feed video series. We kind of call this the stock of the day, but it's really something that we're talking about. Sometimes these stocks are falling out of bed and really getting crushed, or they're plummeting. There's plenty of those stocks on a daily basis. And, we kind of show you where you would have seen something happening. Well, I'm going to bring something up today that maybe not a lot of people are talking about. And it's two machinery companies, but the main one I'm going to be talking about is Caterpillar. The symbol CAT. The other one is not so commonly known, but you drive by a construction site on any highway or large area, enterprise area, and you'll see machines with the name Ingersoll Rand on the side. And that's the other company I want to talk about. Now, both of these obviously, are cyclical names. You would imagine that if things are going well and the economy is booming and things are, running hot, those names should be doing well. Well, today, I've noticed that both of these names have broken down on one indicator that I follow, which is the relative strength indicator. Now, a lot of the times that's an alert to other things happening. In the case of Ingersoll Rand, we see a neutral rating. In the case of Caterpillar, we're still very fundamentally rated, in other words, in a bullish state. However, because it broke its long-term trend, our algorithm automatically downgrades it. No human interaction. It just sees that the trend in price is changing. And then obviously if it goes below what we call our long-term trend on our own charts here, it'll downgrade it. That just says that something is wrong. Either the market just doesn't agree with the fundamentals or something else is known that we can't know. So we like to follow that trend and follow the price actions. So I got two machinery companies right now that are grinding their gears, and they look like they're about to stall right now on the chart. So let's take a look here and see what's going on. All right, everybody, here's the Caterpillar chart that I talked about, symbol CAT. It's in the machinery industry. And obviously, we can see the industry is okay. It's looking strong. Even Caterpillar itself has a good rating. Now, when I say that, it's what I said in the beginning of the video was we downgraded this from bullish. You can see down here that our band was green. And then obviously, it moved down to what we call neutral plus. And really what that means is that it's a bullish fundamentally rated name. However, the price has broken below its long-term trend. Now, not only has it done that, it put in a sort of a lower low here recently, right, in the last X amount of days. But the most recent low is here, and the next low is obviously lower than that. So that's a lower low in our category. So we're starting to see this trend change. Now, again, we've got a big number tomorrow, jobs number tomorrow, the non-farm payroll is coming out, and people are kind of relying on that number to kind of dictate what the Fed might do. So if we see unemployment rise and things of that nature, that's certainly a sign of an economic slowdown, and the Fed might cut rates. Now, that could help machinery names and other folks who are in that sort of category where they're going to be purchasing or need the services of Caterpillar in some way, shape, or form. But down the road, it takes a while for those lower interest rates to kind of take effect. So I'm calling these names out today before the jobs number because, to me, I think they're sending a message. I just don't know what the message is, of course, but we will soon find out. Ingersoll Rand is the symbol IR, again, in the same industry, but this has a neutral rating, right? Been an incredible year here for this name. It went from 65 up to 95. That's a big move, 40 some odd percent, almost 50% move. And obviously here you can see the breakdown is occurring. Now this was more neutral from the fundamental standpoint, but look, a rising tide does lift all boats in this situation where machinery stocks were all doing well. I would say the other one that most is familiar with is John Deere was not, but I'm just going to limit it to these two because these two are my fresh signals right here that are telling me to pay attention, B, maybe protect this if you're obviously owning these names, and C, are they predicting something that we don't know yet? And maybe tomorrow we start to understand why these names might be breaking down. All right, folks, not a prediction here. The charts draw themselves. I'm kind of looking at the charts. Things are going on in those two names, specifically in the machinery area, specifically in a week where we've got some big economic news coming out, where we're seeing a lot of different, again, a push and pull from whether it be economic news, jobs news, it could be news from retailers, semiconductors, AI is all the rage. But looking at the bare bones in that economy where, machinery and industrials in general, obviously have to be there for the growth to occur in our economy. I'm seeing these two names break down, and that's all I'm saying. I don't know what it means. What I do know is that right now that's an alert. And if I was along these names, which I'm not, I would start to protect or pay very close attention to what's going on here in the economy. All right. We'll see you next week here on Chaikin Power Feed video series. Take care. Bye.